Hi everyone, my name is Simon Mishevich from Optimised Accountants, and we're going to be talking about the transfer of UK properties into a limited company and what are the benefits to you for doing this. And we are also going to be talking about the disbenefits. Yes, indeed. So if you want to have access to our free online tax calculators, feel free to use that QR code or go to the link box below and get the URL. It's free to use for whatever tax calculations you want to make. We sure have one ready for you to use. So let's talk about the benefits of moving to a limited company. Before I do, if you are ever going on holiday or buying a property abroad, then make sure you get the very best currency exchange rates. Use that QR code to get those exchange rates, and the link will be in the description box as well. Okay, so we're talking about now those benefits. So income tax. Now we know that Section 24, that horrible taxation. You're not allowed to offset your mortgage interest cost now to reduce your property profits, which means you pay more tax as a landlord owning property in your own name. Oh dear. Capital gains tax, we know the exemptions and annual giveaways has gone from 12,300 down to 6,000, down to 3,000, and then it'll probably be zero by the time we finish this video. So capital gains tax is now going to be a killer for you. Let's not forget, 28% is the top tax rate of CGT by selling property in your own name, which is severe. And then finally got inheritance tax problems as well, but you can mitigate all three of those by using a limited company, especially if you want to transfer them over. We are going to look at limited comp. Yeah, didn't have enough space for company. And then we're going to be talking about personally as well. Now, there's been some tax changes that you need to be aware of for limited companies. So we need to think about income tax. Income tax can be in a company as well as personal. So I know people talk about it as corporation tax, but it's still income tax in a company. So we've got limited comp, and then you've got personally. So let's have a look at a limited company. So the first 50,000 will be taxed at 19%, and then moves up to 26.5% from 50,000 to 250,000. And there is another one at excess of 250,000 at 25%, but again, didn't have enough space. Now, when I talk about personally, you could have a top tax rate of 45%, moving up to 135%. What am I talking about? The 135% could be for one particular client I'm talking about, whereby they were an additional rate taxpayer, but because of the highly geared properties that they had, Section 24 had such a major impact that their property profits was 135%. That's right, 135%. Wow. I mean, who would have thought that you'd be investing in property for the benefit of the banks and HMRC, but that's what this client was doing. So we had to do an awful lot of changes for them to get out of that mess. Capital gains tax, again, similar rates for a limited company. Top tax rate will be 26.5% versus 28% in your name. So that's interesting. Inheritance tax, if you do set up your company in the right way, then that will be 0% versus 40% in your own name above the 325,000 IHT lifetime allowance. Could be moved to £500,000 per person, depending on your house price. But again, get some tax advice. Did I say get some tax advice? There's that QR code. Use it. There's a URL in the video description box below. So make sure that you get onto that as well. Cost of moving properties to a limited company. Stamp duty land tax, because it's a property purchase from the form of the limited company. So stamp duty land tax could be due. Capital gains tax, if you've made a gain, taxable gain that is, then you have to pay CGT. And then you've got all this legal finance fees as well. If you are ever thinking about incorporating your properties into a limited company, then feel free to use that QR code link in the description box as well. And we can try and help you work out whether it's the right thing for you to do or not. Again, don't forget that we do have online tax calculators for you to use for calculating CGT and stamp duty land tax as well. But most times out of 10, people don't, right? Every call I tend to have, because of stamp duty land tax being so high and CGT is significant, then it doesn't really make sense. The payback period I look at is typically in excess of 12 years. So you pay the tax up front and you don't get the benefit for 12 years. Well, you know, that's a long time to wait, isn't it? 12 years. I mean, do you wait for anything for more than 2 years? I don't know. but most times out of 10, 12 years is too long. Now, incorporation, moving properties into a limited company. Can you do this? Now, is it possible? Now, husband and wife that have been together for 2 or 3 years and have properties together, 50-50 owned, then this is a partnership, okay? You could have business partners as well that have been in a business partnership and LLP or limited liability partnership. And as long as they've been in that partnership for 2-3 years, then they can also move to a limited company. They can incorporate their property portfolio. Why am I talking about all this gibberish? Well, simply put, you can move your properties to a limited company using husband-wife partnership, which is called a de facto partnership. I didn't learn that until recent times. And you also have this business partnership, which have been using an LLP for 2-3 years. You could move and incorporate your property portfolio into a limited company. It costs you between 10 and 20,000 on average, but it can save you income tax, capital gains tax, and inheritance tax. The inheritance tax in itself is worth you paying the 10,000, 20,000 pounds now to prevent that problem from happening. And Uncle Sam, being HMRC here, being your inheritable beneficiary of your estate, which, do you really want HMRC to take your money? You've been building up a nest egg to avoid that, and yet all of a sudden they're going to be part of it. So, in short, I think you've got to look at the cost of incorporation. If you incorporate, there is no stamp duty, land tax, or CGT, by the way. So it is possible to incorporate your property portfolio, avoiding stamp duty, land tax, avoiding capital gains tax, using the incorporation relief, as long as you're a husband, wife, being married, investing in property together for more than 2-3 years. Business partnership, again, 2-3 years, using a limited liability partnership. Move your properties to a limited company using this incorporation process. Pay 10, 20,000 pounds. Yes, it's a lot of money, but actually, could it save you a lot of IHT at least? Never mind income tax and CGT. Of course it can. So it's certainly worth you thinking about the benefits and the cost of incorporation being a disbenefit, and making an informed decision of what's right for you and your family.